Hi, my name is Dondria Owens, and I am the owner and founder of The Creative CFO, where I work with online entrepreneurs to really know your numbers and grow your profit. Today's topic is all about your finances. So, we're going to talk about going from freelancer to business owner and everything in between. So, let's get started. Now, a little bit more about me. Again, my name is Dondria. I spent more than 10 years in public accounting, auditing the financial statements of real estate companies and developers and contractors, you name it. And during that time, I started a small business as a wedding invitations designer. It was a load of fun, but it was also a lot of work. And what it did was it introduced me to the online space and to the small business owner in a way that I had not seen before. And so having to navigate this part of business, even for myself as a professional, was pretty tough. But in doing so, it gave me some best tips and best practices that I wanted to share with other small business owners. And that is how the Creative CFO was born. I'm a wife and mom of two, and I live just north of Metro Atlanta, but my clients live all over the U.S. All right, so let's get into today's topic. Are you a freelancer or a business owner? Now, let me start by saying neither one is better than the other. It is merely a choice. Do you aim to be a freelancer or do you aim to be a business owner? Because making the distinction for yourself between a freelancer and a business owner is your very first step. So if your goal is to forever operate as a contractor, you don't want to run a business, you don't want the hassle, you prefer to just do your work and receive a 1099 from the people that you work with, then great, stay in the freelancer space. But if you're here, I'm thinking you probably want to move over to the business owner side. After all, this summit is called Scale with Ease. So if that is your goal, I want to make it super easy for you to really get this process streamlined and to seat yourself firmly in the business owner seat. So let's talk about the main differences. So when I'm looking from freelancer to business owner, one of the top things that I notice is whether your business is owner funded or operations funded. And here's what that means. If when you need a new computer, if when you need to purchase software to be able to communicate better with clients or to manage your projects, if those things come out of your personal bank account or you pay for them with a personal credit card, you are still funding your business as an owner. Now, conversely, on the business side, if when it's time for a new computer, paying for software, paying for contractors, you do all of that out of the business account and from the business's sales, its collections, then it is operations funded. See the difference there? Okay, so here's what that can kind of get you. I want to get your mind to thinking about where the money comes from in the business that you run and also where the money goes out. So this next one kind of touches on that just a little bit. It's extra cash versus a clear profit plan. Are you looking at the money that you bring into the business and the money that goes out as just extras? Or do you have a clear plan for making your business profitable? So think about it in these terms. If when you receive a check from a client, you put it into your personal bank account and you go about spending as usual, you view that client payment as extra cash and you put it straight into your personal account. You didn't consider upcoming business expenses. You didn't consider the impact of taxes. You merely viewed it as extra cash. Now, if you had a clear profit plan, that would mean that as sales come into your business and you receive client payments, you put them aside because you know you have expenses coming up just for the business. And you know what those expenses are on a monthly basis. And you always have enough cash in your business to cover those expenses. And what's left over, we of course know as your profit. And you've got a plan for where that goes as well. If that doesn't ring true just yet, it's definitely the direction you should be going into if you're wanting to be more of a business owner and less of a freelancer. It'll be doubly important to know that as you decide to scale your business, because what we often see happen and when we're scaling is that Revenues go way up, sales go way up, but so do expenses. And without a clear profit plan, we have no way to guard against that. So that's why it's so important. Okay, so next up, receipts versus profit and loss statement. Now, freelancers and some business owners alike tend to keep a load of receipts in a box somewhere. And then they bring them around at tax time and their tax preparer has to sort through all of the madness. Well, that's more freelancer behavior. Again, you're approaching things from the personal standpoint of what can I have as a quick tax write-off. There's no real plan behind it. And also there's no real structure or organization either. We don't want that at all for you. So if you are moving closer to the business owner side, you have an actual profit and loss statement because you have bookkeeping software that you're using. And you're also storing away receipts as additional proof. It's not your primary proof that you're taking to your tax person at year end. So a freelancer has receipts stored in a box. Business owner behavior, you've got bookkeeping software. You're running a monthly profit and loss statement that shows you all of your sales and expenses, which leads to your profit. And you've got those receipts properly stored so that if you're ever audited by the IRS, you've got proof that your purchases were legitimately for your business. All right. And the very last one, social security number versus tax ID. Now, we've all been told, keep your social security number safe, right? Well, here's one of the things about working as a freelancer. You get asked for a W-9 lots of times. It is the way that contractors receive documentation after the close of a year for working with anyone who has paid them over $600. What that does is it serves as like a receipt between you and the person that you did work for. And one of the things that they ask for on that form, besides your name and address, is an ID number. Now, if you do not have a tax ID number, sometimes called an EIN, for yourself, then you have to use your social security number. And that's not very safe. Imagine how many people you work with during the year and all of them having your name, address, and social security number on a form sent through email, stored or handed off to their accounting department. It's just not very secure. So one of the things that we do as business owners is we get an actual EIN number. It's free. You can file for it online. Just go to irs.gov in the search bar, type EIN, and it'll take you to the online application for that. Now, it's one of the things that separates freelancers from business owners because going forward, once you are a true business with an EIN number, you'll use that on your W-9 going forward. And that's a lot more secure than your social security number. Okay, moving along. So let's talk a little bit about some more business financial best practices. So you've heard us talk about in the online space, talking about the types of entities you can form or the type of business you can be. So there's a sole proprietorship. And that's what you operate as by default. You're just you handling business transactions, right? Well, you can also form a legal entity known as a limited liability company. And what that does is offers you some additional legal protection against your personal assets being attached by anyone who might sue you in the course of business. So it creates a clear divide between you, the business owner, and your business, which you absolutely want to have. So that is one type of entity that you can form. Another is a partnership. That's when two or more people or entities get together and form a business. And so you have a formal partnership agreement. You've got articles of organization on file, all of those things. And you do that with the Secretary of State, the same as you would for an LLC. And then there's a corporation. All of these have different reporting requirements with the IRS, and they all have different tax liabilities attached. We won't get into that here, But the main thing to think about with forming a legal entity is protecting your personal assets and separating them from the business. That is the main thing. All right. So the entity that I recommend most with people that I work with is an LLC. It's typically the most cost effective one for them to form. And then all of the business's activities still get reported on the personal tax return on the Schedule C. And so that one tends to work best. However, you would do best to connect with an attorney and a CPA to discuss your individual needs. Between myself and an attorney, we could tell you from a legal liability standpoint and from a tax planning and financial aspect which entity would be best for you. Now, once you decide on the legal entity that's best, you want to get separate bank accounts from your personal. So you've heard the term commingling before, which means that you have personal and business transactions all living in a bank account together. That's what we call commingling. Once you set up that legal entity, you definitely don't want to commingle funds anymore, because what it can do is what we call pierce the corporate veil, or it can look like the business and the business owner are one and the same. And if you've taken the time to set up a legal entity, you definitely don't want to then null and void that by combining the bank accounts and not showing that true and clear financial separation as well. So separate bank accounts are next on your list. All right. And the third thing you want to put in place as a business financial best practice is bookkeeping software. It's going to save you so much time. So the best thing to do is to set up your bookkeeping software. I recommend two. QuickBooks is my absolute favorite. I use it with all of my clients. And the second is Wave Apps. You can go to waveapps.com. It is free software. I used it for 3 years while I was designing wedding invitations, and it worked just fine for me there. However, QuickBooks does have better reporting than Wave. With Wave, you can run 2 or 3 reports. With QuickBooks, you can run them for days on end. And so it just depends on how much visibility you need in your business. And as you start to scale in your business, you'll want to see things like accounts receivable, which clients still owe you money. You'll want to see things like your profit and loss by month over the course of an entire year. And you'll want to see that side by side to make, comparisons between the periods. So there's all sorts of things you'll want to see as you start to scale. And if that is where you are in your business, QuickBooks might be a better bet for you. When it comes to the QuickBooks software, if you start with Essentials or either the Online Advanced, those are your best bet. I do not recommend QuickBooks Self-Employed just because it doesn't have the same reporting capabilities as Essentials and Online Advanced. So those are my recommendations there. Also, with connecting to bookkeeping software, you get rid of that spreadsheet where you're tracking every single client payment and every single expense every single month and using all of your time, because as you scale, time becomes more valuable. So we want you saving time wherever you can. Okay, so moving along to the fourth one, a sales and spending plan. So now that you've done the first 3 things, you've got the legal entity, you've got separate bank accounts, you've connected those bank accounts to your bookkeeping software, and all is right in your world. You want to start to look ahead, and that's when you create a sales and spending plan. It is the one opportunity you have to really control where the money comes in and where it goes out in your business, and not just use your books or your numbers for historical purposes. Because let's be honest, when you have a bookkeeper and you get your bookkeeping done and you get those reports, it's a look back. The sales and spending plan is a look forward. It is goal setting for the future, and it's also you painting a picture of what profit could be and really pursuing that. Because as a business owner, you have to be profit motivated. That is one of the criteria for being a business, is that you are engaged in some trade or activity for profit. So your sales and spending plan should reflect that. And then the 5th thing is a tax ID number. We've talked about that. You've got the legal entity formation. You have the legal entity name. You can use all of that, go online and get a tax ID number and really set your business apart from you personally. All right, so let's talk profit and paying yourself and everyone's favorite, taxes. Okay, so how do you maximize profit? There's only two ways to do that. You can increase your sales or you can lower your expenses. That's it. And you can do either of those at either rate. But that's what you can do. So let's talk about increasing your sales. We'd be talking about either taking on more clients or charging more for our service or creating a new line of service, things of that nature. Streamlining expenses could be reducing software expenses or paying the annual instead of the monthly fee to save. It could be streamlining your team and either having less people and more automations. That's a possibility. It could be revisiting your advertising budget and look at what you're really spending and if that is really producing a return for you. Those are all areas that I look at first to see where we can make some cuts, can streamline, and still run the business in the way that the business owner needs to in order to bring in those sales, but also to maximize profit as much as possible. So the official formula for profit is sales minus expenses equals profit. And if you're looking at that formula, you know exactly what you need to manipulate to get your profit number higher. So what's a good profit margin? So if you look online for the average business, or if you look in business books for the average business's profit margin, you'll see anything from 10 to 30% as a margin. But I work mostly with online entrepreneurs, and I know that number is much higher on average for us. So looking at that, the very first benchmark I set for a client is a 50% profit margin. That means for every dollar that you bring in, you spend 50 cents. So that's just my first test to see if we are in the ballpark. But anywhere between 50 and 70% is typically good for a profit margin. Now, when we're talking about those margins, just to put it into perspective for you and give you a formula for it, it is your sales minus your expenses. That's what gets you to profit. And then you're going to take that profit number and divide it by sales. That's how you get the percentage. So if you have up-to-date bookkeeping and you want to try that out on your own business, definitely do it. Send me a DM and let's evaluate that percentage and kind of talk about where you might have to make some shifts to increase your profit margins. But it's definitely doable. All right. And so now let's talk a little bit about what I like to call the 50-30-20 method. So this might sound familiar to you. It's from personal finance where they teach you the allocation that 50% of your take-home pay should go toward fixed expenses, 30% to variable, and 20% saved. So I kind of took that and flipped it on its head for business. And produced a formula to really help business owners who might have a regular income from month to month really come up with a consistent way to pay themselves from the business. So the way I allocate it out is 50% of your profit goes for your pay. And then 30% of profits you set aside for estimated taxes. And the last 20% you set aside for business savings. And so in this way, if your profit is $2,000 for the month, 50% of that, $1,000 would go to you. And then you do the rest of the percentages, of course. So what happens is your salary can change or your pay can change from month to month based on what your profit is, but you're never spending below your available cash. And so this is really helpful, again, if you are okay with the fluctuation in your pay. If you are not, then there are other things you can do, such as setting up cash reserves, things of that nature to sort of fill in the gap for you when your profits are lower than expected. Again, it's something that you should work with an accountant with to do a cash flow forecast to see if that is an issue for you if you're uncomfortable with the fluctuating pay through the 50-30-20 method. I won't bore you here with the details of that because it is pretty intense to forecast that out. But this does give you some ideas on how to allocate your profit so that you're paying yourself and you're prepared for taxes when it's time. All right, so let's talk about some common mistakes I see as business owners scale and how you can avoid it. So the number one mistake that I see as businesses are scaling is taking on too many expenses. And this is why it's so important that you have a really clear profit plan that details out what sales you need to bring in and what expenses you'll be paying by period, by month, so that you're clear on the profit expectation going forward. And so that you have a container to work with in order to spend on expenses and that you don't exceed that and then tap into the next month's profits. All right. The second one is paying your team and not paying yourself. You should be part of this equation. If you're able to pay a team, you should be able to pay yourself. And if you're not, it's time to reevaluate and maybe streamline a bit. Maybe you need to automate some things and do some different outsourcing. Maybe it's a VA that you need instead of an OBM so that you can cut expenses temporarily. But you should definitely be paying yourself. Do not leave yourself out of this equation as you are scaling your business. All right, number 3 is waiting the whole year to pay taxes. There's nothing worse than going the entire year, having great cash balance, having profits every single month, and just feeling really high on life, and then get to tax return time and owe multiple 5 figures. It is not fun. It makes all your hard work during the year feel like it was for nothing. So do yourself a favor and save for those taxes every single month and pay quarterly estimated taxes. This helps you get into the habit of understanding exactly where your money goes, knowing what's yours to keep, and not having any surprises at the end of the year. We want to eliminate surprises as much as possible. All right. Number 4 is using a spreadsheet to maintain your finances. So as you start to scale, your sales are going to increase, your expenses are going to increase, the level of reporting needs to increase as well. You don't want to be beholden to a spreadsheet to enter all of those transactions all by yourself. So use a reputable bookkeeping software and let it do the heavy lifting for you. There's definitely so much benefit in having profit and loss statements and balance sheets that are up to date and you can pull them at a moment's notice. Instead of just having a spreadsheet that you hand off to your tax person, you are missing out. And the last one is spending down to the last dollar in your business. We all know unexpected expenses come up and you need to be prepared for them even in your business. So I implore all of my clients to set a new zero for the cash balance in their business. And that way we never spend down to the last dollar. Now, for some people, that might be a couple $1,000s. And for some, it could be with teams, it could be much, much higher. Whatever is your level of comfort for when you feel like, okay, I'm at my cash floor, set that as your new cash zero. Now, some ideas for what that might be in case you're concerned. The minimum should be at least a month of your business expenses. So if your expenses for the month are, let's say, $500, let that be the minimum for your cash bank account. So that means that your balance will never fall below $500 because $500 is your new zero. Make sense? Okay. Okay. So now that we've walked through all of those things, I hope that you found that information super helpful. Again, if you have any questions, reach out to me in the comments or also on Instagram. I'm always on there. You can find me in the DMs. I'm happy to help you in any way that I can. And no, all good financial decisions start with knowing your numbers. So get to know them well. All right. Also, I've got a freebie for you. If you need help, you don't have an accounting system or bookkeeping system set up just yet, I have a believable budget workbook that you can access via the link that you see here on the screen. And it'll walk you through compiling all of your expenses and then adding in what you'd like to pay yourself to get to what I like to call the magic number. This is what your sales would need to be every single month so that you can hit that goal. So this worksheet is super helpful for you to figure out exactly what you need to make every month so that you can hit your personal pay goal. And that's my presentation for today. Thank you so much for having me here with the Scale with Ease Summit. I had a really great time. And yeah, I'll see you online. Have a great one.